Mohammed, welcome to the show. I have to say that I've been following you for many months, and I have full passion of what you're doing. So having you in finance for non-finance is just the right fit for us, because the force that you're managing across all the board and changing the perception about finance people, it is extremely remarkable. And your excitement and acceptance to join the call in no time, that was extremely helpful for me. So thank you very much for joining us. It's happy to have you on the show.
Thank you very much, Mahmoud, for inviting me today. And I'm very interesting to have a great discussion today.
Inshallah. Now, if we're gonna start introducing Muhammad or Ruby in general. So everyone is driven by purpose in life. Even if this purpose is not well written, for example, as a clear statement, you have your gut feeling where exactly you should be heading, what exactly you need to do, and the linkage of all of this as a purpose. So people sometimes driven by purpose without knowing that this is their purpose. Now, if I ask you, general in life, professional, personal, what is your purpose in life?
Actually, Mahmoud, my purpose in life is to have a sustainable, enjoyable, successful life. This is my purpose. But at the same time, I have to help people to have the same. So I would like to help people to succeed, to grow, and to have a sustainable success. Believe me, successful without sustainability is not. I cannot say this is a great success, because you should you have to ensure sustainability of your success and enjoy it as well.
Yeah, sustainability here means it should be sustainable for longer periods of time.
Exactly.
So, on a daily basis, if your purpose link it with your actions, so it should be whatever you do on a daily basis, link it to your purpose. But sometimes you got squeezed, you don't feel comfortable, you're under pressure, you deviate around this purpose. Maybe the direction is clear. How do you keep track of the purpose? What exactly reminds you every day that this is my purpose? It is in line with my purpose. It is not in line with my purpose. You know what I mean? Keeping the purpose flowering every day is not an easy job. Saying the purpose is easy, but keeping in track of that purpose and linking everything of what you're doing on a daily basis, it's not easy. So how you keep track of your purpose? How do you don't deviate from your purpose in general?
Yeah, in general, we should have whatever, sometimes because we are a finance people, have all the time, pressure and all the time stress. But if you have in every day, you have to sit with yourself for just few minutes, just to reflect, to meditate and think again and rethink again and re-energize yourself. And also, as I told you, I would like to help people to grow and to succeed. And always I receive very positive feedback from some people that you motivated me, you changed my life. Once you receive this kind of feedback, it re-energizes you again. So and redirect you to move to the right direction and into your purpose as well.
Okay. So since you mentioned finance, how did you end up in finance? What was the story, the original story of joining finance? Did you choose finance or it was just coincidence?
Yeah, actually, I like finance. I like business in general, and I found the finance career has a wide, areas we can contribute to the business. Because once you work in finance, you have to connect the dots with all functions, dealing with different people. So I like finance. I like not the traditional finance like accounting or whatever. I'm talking about in general finance as a business finance. So you need to be very close to business, sitting with the marketing people, sales people, supply chain people, IT. So I like to be very close to business, and I like business in general. So I see finance as a very close fit to my passion. Yeah.
So how did you choose? You plan to go for finance?
Yeah.
From day one.
Applied to.
You applied for finance.
Yes.
So it's not a coincidence.
No. I like it.
And the commercial aspect of finance, that's what you enjoy more, where you interact and drive the business forward. This is what exactly drives you.
Exactly.
Okay.
I'm from day one. I don't like traditional things. I don't like boring things. So I like to be very close to business, very close to commercial. Yeah.
Okay. If you go back in time and you have to choose other career other than finance, what will be this career?
I like marketing because I'm a person who likes, innovation, like new ideas, like adding value to customers. And sometimes when I make some finance presentations, the feedback that, from different people telling me, Mohammed, your presentation is a marketing presentation with a content of finance, So I like marketing very much.
Yeah. So I hope in marketing you're not investing the money without an ROI. In every function, They love to have the best campaign ever, or supply chain, they like to have the best machine ever. But somehow finance hold their temper and tell them ask the right question in the business. So being in the marketing, I agree with you. It helps to deliver the message, especially for a complex finance information.
Yes.
You need a lot of marketing to deliver the message from a finance point of view.
And did you know, Mahmoud, in our life as a finance people, we need to brand for our functions. And we're going to talk about this one because we are, as a finance people, we are lacking this area. We are not promoting for our activities. We are not branding for ourselves. This is why I like marketing should be involved in the finance agenda.
So that's the perfect moment.
Yes.
If you just shift the gear and go to the next section, since you said marketing of finance, you've mentioned a beautiful statement about the myths and the truths about finance, because there is a general perception about finance department and finance people, and people like you actively on the social media promoting the non-traditional way of finance, giving the speech and the knowledge for finance and non-finance people, and rebrand how the finance should operate in the coming period of time. Now, if you can share some light on that, what is the truth and myth about finance?
I like your question, Mahmoud, because really many people have a wrong perception about finance, because people sometimes look at from only one angle or from one dimension. But finance, really, we need to correct that perception about finance. Number one, most of people see finance as the people who are cutting expense, right? The people who are cutting expense, especially marketing people. Oh, finance always cut expense. We have to stop budget. We have to, stop expenses. No, finance really shouldn't focus on cut expenses. The real finance should focus on how we spend our money in the right place. So how to spend put our money in a more rational way, ensuring the ROI, ensuring putting the resources in the right direction, behind the right area. So, for example, if you have to invest, make a choice between 2 or 3 brands, shall we invest our money behind brand A or brand B, brand C? This is the role of finance, not to cut expense at all. We have to put our money behind the right things, even for sales force effectiveness. We have to put the right resources behind the strategic brands or the successful brands. This is the way we have to correct, the perception about finance, to reallocate our monies behind the strategic area. This is one thing. The second perception also about finance, that the people are talking always about numbers, right? They are numbers talking about numbers, but the real finance people should talk about what is behind numbers. What is the business story behind numbers? What is the commercial drivers? What is the business drivers? This is another important area for between perception and the truth about finance people. The third one, which is about also finance, people are process oriented, system oriented, sitting all the time behind process. You have to do that, and you have the workflows. There are 5 or 6 steps you have to follow, or system oriented. The system is saying that, the ERP is saying that, but finance, the real finance, should be sitting very close to business, building relationships with people, understanding business, helping business. This is the real role of finance. System is just a tool. Reports are just a tool. Process is just a way to organize our works. But the real finance should sitting very close to business, helping business people to make the right decisions.
Okay. So this is exactly linking with what you said about marketing and how you can deliver the message. So even if there is a budget cut, for all the right reasons, I think business management and finance as well, business partner, they need to explain the rationale behind it, so the story behind it, and then they can be open for any other options as well. So they can say this is the scenarios that we have, and if you see any other option that we can safeguard the direction of the financials, please let us know if there is any creative ideas that we can do differently. But in that sense, people don't like cutting budget. But part of that we're gonna cover later, because they lack the basic financial understanding of the P&L construct. So even as a discussion, you get some questions like, why cutting budget? Why not growing the business? Why cutting budget have a direct impact on the profitability? Even it's a pure math. It's not financials, in the P&L. So having this finance for non-finance discussion with non-finance people, it will equip them to fully accept and understand and cooperate and even find an alternative creative solutions to deliver the financials, rather than just a declaration from the top management, the budget has been cut for XYZ period.
Yeah, totally agree with you, Mahmoud. Yes.
Okay, so now, since you mentioned the finance people are extremely busy, and the perception about the finance people that they are process-oriented, system-oriented, which should not be, or number-oriented, should be more into analysis, guidance, partnering-oriented. Now, if I go to the finance department as a non-finance person, and I see a lot of people extremely busy all the months, not only during the weekend, the week of the closing and the forecast, extremely busy everywhere.
Yeah.
Who should I speak with? If you can just explain to us the finance structure as an overall, because we see an army in finance everywhere, but I don't know who's doing what. Who should I speak with if I need any help or support from finance?
Yeah, that's another good question, Mahmoud, because sometimes people think finance as just the accounting department or a finance department, right? But finance in general are divided into different functions and different areas. And let me explain it in more details, because people need clarification, because people just sometimes thinking that the finance or the people are transferring their salaries or, paying their expenses or paying to vendors or whatever. No, finance, you have different areas and different areas for expertise as well. So let's start with the first function under finance, which is the FP&A or commercial finance. There are different titles for this function, but in general, it's called FP&A, or business controllers, or finance business partners, or commercial finance, or business finance. This function is about building the financial planning for the company, making financial analysis to support decision making, preparing the management reporting. Most of their time they are talking about the future. The people who are building your forecast, building your long-range plans, supporting strategic planning, and at the same time also supporting the decision making. So if you have a new product launch, go to this function. If you need a new business case, go to this function. Pricing analysis, go to this function. Profitability analysis, go to this function. So this function is about supporting decision making, financial planning, financial analysis. Okay, this is the first function. The second function, which is accounting or controlling, that has different also titles in different organizations, but they are the people who are managing the accounting and controlling. This function is very important for the company, because this function, number one, they have to book all the company's transactions. Can you imagine that we don't have history of what has been achieved, what is our bank account, what's our cash balance, what's receivable balance. So this function has to book every single transaction in the organization. They are booking our salaries, they are booking the travel expenses, they are booking the receivables, they are booking our money in the bank. So they have to book all the historical data. That's number one. Number two, they have to prepare the financial statement for our auditors and for our external investors. So this function is very important to book all the historical data. And also this function also are our business partners, because they are dealing with customers, dealing with suppliers, support also the organization with the analysis of the historical data. And this function also responsible to ensure internal controls, for cash and for receivable, for everything. The third function in under finance, we can name it treasury. And treasury, they are the people who are managing our cash, our money in the company. If you want to find a cash to fund any new project, any new investment, any new merger and acquisition opportunity, go to this function. They are talented to get for you money from different sources, banks or other financial institutions, or whatever the source. Also, this function responsible to invest the company's money. Shall we put our money in bank A or bank B? Shall we keep our money in US dollar or in euro? So they are also dealing with the currencies as well. So treasury are managing our currencies, are managing our financing activities and our investing activities. And also in some countries, if you have any currency devaluation issues or whatever, go to this function. This function is very critical as well. The next function, which is, I see it, specialized function, which is the tax function. The people are dealing with different types of taxation matters inside the organization. So these people has to ensure the companies comply with the tax regulation. So they have to follow the rules for tax, ensuring that there is no issue in taxation, any things related to tax as well. Another function which is about internal audit or internal control. It's not under finance. I don't say internal audit is under finance, but there is internal control departments, which is a function that to ensure, compliance inside the organization, ensure we have the right process, ensure that we have internal control for each process, ensure there is no fraud, there is no things related to compliance. So this function also is very important to save the company's money and save the company's assets as well. So those are the key functions in the finance department, and those functions are varies from company to another because of the size of the organization. Sometimes you need 10 accountants, sometimes you need only one accountant, sometimes you need 10 FP&A. It depends on the size of the organization. But those are the key functions under finance.
So the beauty about what you said, that the perception, going back to the perception and the truth, some people think that the FP&A or finance business partner is only the critical sub-function within finance. They are more into strategic oriented. They are finance business partner where they can understand the commercial lens and deal with other functions. But you mentioned something that even accounting and controlling, where as a perception looks like more into controls and accounting, pure accounting. They don't interact with the other sub-organization or sub-function in the organization. But you mentioned that they even partner, because they partner the external audit, they partner other function for related to the controls required. They partner the treasury team whenever it comes to compliance related to cash. They partner the chairman and the head of the organization to make sure that all the published accounting, if it's published or listed company, they are in the right direction and all the accounting. So I mean, they have a partner role. And I think that's what you're calling, that even changing the perception that even every sub-function within finance, it is not can be, it is a business partner at the end. You agree with me?
Yes, I totally agree with you, Mahmoud, because finance business partnering is not a job title. This is very, very important concept that everyone should be aware about it, because finance business partnering is a mindset. I can be a CFO, but not a true business partner. I can be a junior accountant, but a true business partner. Because business partnering is about mindset. If you are a person who are keen to support the business, build the relationships, turning data into insights, keen to understand the business, have the curiosity to understand what is behind numbers, you are a business partner. But if you are just like a policeman inside the organization, just some people name the CFO no, just saying no to everything, and people sometimes afraid to go to their office. This is definitely not a business partner. If people feel comfortable to go to your office, get your advice, get your insights, you are a business partner. So it's all about mindset. It's not about job title. It's not about your seniority. Everyone can be a business partner.
This is beautiful. I love the concept that you said finance business partner is not a title, it is a mindset.
Yeah.
And even the other perception, where you're covering very good point here, Muhammad, that whenever you go more higher senior, you assume that you're more finance business partner mindset, which is not true. Maybe you have an extremely junior finance person. Having the right mindset, joining the company can be the most effective, efficient finance business partner, more than the most senior people. So I agree with you. That's
yes.
This is beautiful. I love what you said now. I think that's what you're calling out. You've been calling out about the finance business partner. Maybe later we're gonna cover this in a different episode. Now
this is my passion.
Exactly. So you're passionate about the mindset of the finance business partner across all the finance function. Okay. So now if we speak about the interaction between different sub-function within finance. So now, clearly, as you mentioned, if I have a cash challenge or a question for cash, I have to go to treasury team. If I'm doubting any transaction and I need to get some clarification, I could go either to internal audit or control or accounting and controlling team.
Yes.
If I have a pricing discussion, profitability discussion, forecast, I have to go to the FP&A or finance business partnering team. But how these functions within finance operate together?
Yeah.
So the interaction between finance business partner and accounting and controlling and tax and treasury, it will be helpful to share some light on the interaction within the sub-function of finance itself. So people from outside community of the finance, they will be aware on the interactions. Maybe there is a challenge, maybe there's an opportunity of improving the internal communication within the finance team itself across all the board. You see what I'm saying?
Yes. That's a very good point also, Mahmoud, because all the finance functions under finance should collaborate together. And we are talking about, we have to collaborate with people outside of finance. For sure, we have to collaborate together. And each function is depending on the others. This is very important things. If I'm working in the FP&A, how can I get the actual data to build my forecast if the actual data is not right? Or if the accounting team did not provide me the right actual data. So I need accounting for sure. We have to collaborate, work very closely together, right? To analyze the historical data, to answer the right questions, and we have to collaborate together. Sometimes also the accounting needs the FP&A. Sometimes the accounting comes to, when I work in the FP&A, sometimes from accounting ask me, what is the forecast? What is the budget? I'm asking the accountant, why you need forecast? Because you are only keen about history, right? They told me, no, we need forecast to make some provisions based on the expected stock consumption or based on the sales forecast or whatever. We need to make some provisions, right? So we need your advice. Sometimes also for some asset impairment exercise or whatever, they need forecast. So the two functions should work very closely together. Also, sometimes the accounting, sometimes they added new product or new account or new line, and the FP&A is not aware about that. So when they start building the budget, they found new lines or new products which they are not aware about. So everyone should be work very closely together. Definitely, treasury is the same, because treasury to build their cash projection or cash forecast, they need the forecasting assumption from the FP&A. So also treasury needs the forecasting from the FP&A to build their cash forecast, right? So all the functions are working together. This is why I believe all the functions are important. All the functions are, because sometimes people feeling that FP&A are more important, people are more important than the other. No, every function is critical to the company, and any failure in any of those functions will have a big risk on the company in total.
Yeah. So I fully agree with you. Now, as the cooperation between sub-function together should be at efficient level.
Yes.
And they need to use this as an opportunity. So if the controlling and accounting, they need to challenge the business related to the forecast. His partner to do that is the finance business partner sitting with the business team. Same concept. If the commercial team, they have a new idea to be implemented, but we need to make sure the governance process of this idea. So the FP&A need to reach out to the controlling team and accounting team and make sure that, do you see any risk of doing this idea or transaction from a control lens? So I think all of them, they need to go hand in hand. Same as you said in the forecast, link it to the cash forecast and treasury, CapEx, machine, other investment that require forecast lens, and the forecast accuracy will be depending on allocating the resources.
Yes.
So whatever they agree as a sub-function together as a finance should be extremely powerful to support the business.
100%.
And if this link is very strong enough, I think the business will see finance adding more value to the whole operation as an overall.
100% agree with you, Mahmoud. And as you said, everyone should be a business partner. If I'm an accountant, I have to be a business partner. I have to partner at least with my other function.
So in that sense, what are the basic terminologies that non-finance people need to be aware of, so at least they can digest and understand what finance are trying to drive in the organization?
That's a very, very important point, Mahmoud, because finance terminology and finance language in general is a common language for business. If you are non-finance people, however you are commercial director, HR, supply chain, whatever, in any business meeting, people speak finance language, right? People talk about growth, talk about efficiencies, talk about return on investment, talk about CAGR. So in all business meetings, we are talking about finance, right? Or talk about finance or use finance terminology. So I need, whatever my position or whatever my function, to understand finance. Definitely we have a long list. We have a dictionary of finance terminology, but let me give the most common one. Let's start with the when we have any leadership meeting or town hall or whatever, usually the CEO or CFO talk about year-to-date performance, right? You always take our year-to-date performance is what does it mean by year-to-date? Year-to-date is our performance since the beginning of the year until the end of the current month. So when I say year-to-date July, it means our performance since the beginning of January 1st until end of July. So year-to-date means our performance during the beginning of the year until today. Sometimes also we have something called month to date, MTD. MTD means our performance since the beginning of the month, of the current month until today. So if we are in March 25th, okay, it means our performance from March 1st until March 25th. This is called month to date. We have another terminology is called YTG or year to go, which means what we have to achieve until year end. Let's say we have already 8 months passed in the year, and we have still remaining 4 months. So what we have to achieve in the remaining 4 months, it means year to go. So year to date plus year to go will give us the full year. Okay, this is from finance terminologies when we are talking about the performance. Also, sometimes in the leadership meeting, people usually say top line or bottom line. What does it mean by top line and bottom line? Top line is the sales line or the net sales line or the revenue line, which is why we name it top line, because this is the first line in the P&L or the income statement, which is the sales line. So when anyone say top line, it's mean our sales performance or revenue performance. Bottom line, because bottom line is the last line in the P&L, which means our net profit or operating income or whatever, the last line in the P&L, which is the net profitability of the company. So that's called bottom line. Also, many non-finance people asking me, what is the difference between CAPEX and OPEX? We always hear CAPEX and OPEX. What is the difference? So OPEX means our operating expenses. What does it mean by our operating expense? All the expenses we need to spend in a short time to run the operation of our business and to achieve our top line. Operating expense means our salaries, our travel expenses, our stationaries, utility bills, sales force activities, marketing materials, rent, all the operational costs that the company has to spend to run its operation. It's always short-term spending. Okay, we have something called CAPEX. CAPEX means capital expenditures, which means that we invest money to get a long-term benefits. Let's say we are in a company, we have to purchase a new machine. Definitely we are not buying a machine to use it for 1 or 2 weeks, right? So we need a machine to get for us a benefit for a long term, for 5 years, 10 years, 20 years. This is why it's called CAPEX. So when we invest on something that will give to the company long-range benefits, it means this is CAPEX. What are the key types of CAPEX? We have machines, we have furnitures. Definitely also in the company buy a furniture. Definitely we are not using for 1 or 2 months, right? Furniture for long term. Company cars, buildings, all of those types of investment, computers, furniture, as I mentioned, or land, all of those are CAPEX or capital expenditures that will give the company value and benefits in the long term. Also, there are some other terminologies like AR, AP. People usually say, what does it mean by AR, AP, DSO, DIO, DPO? What does it mean by those terminologies? AR means accounts receivables, which means when we sell our goods or providing our service to our customers, and until collecting our monies, we put it under an account called accounts receivables. So accounts receivable means the cash collection that we have to collect from our customers based on a goods we sold or a service we provide. It's in a very simple manner. So in a very simple way, what our customers owe to us. Okay. Accounts payable is the opposite. Accounts payable is about what we owe to our vendors. So if we received a goods or raw materials or whatever from our vendors, or we received a service from our vendors and we did not pay it yet, we put it under accounts payables, which means if we have 100,000 on the accounts payable, it means we owe our suppliers or vendors 100K. Okay, so this is what we have to pay to our suppliers or vendors. How to measure the efficiency of those accounts? Accounts receivable, we usually measure it through DSO, days sales outstanding. And this is very important things for not only for finance, for commercial people as well. When I say the DSO, mean we have 70 days DSO. It means it takes from us 70 days to collect our monies from our customers. The lower the days, the more efficient the company. So if the company is more efficient, has a strong team collection, strong relationships with customers, our commercial are following up on the collection, our credit team following up, and we are getting our money earlier, it means we should have a good DSO. So DSO, it means our efficiencies in collecting our monies. DPO is the opposite. How many days it takes to pay to our vendors or our suppliers. So if the DPO is 80, it means we pay to our vendors after 80 days. To have definitely a better cash flow, you have to maximize your DPO. So try to negotiate with the supplier to pay, as long as you can, and at the same time try to negotiate with your customers to collect your money as early as you can, if you would like to have the better cash flow. Also, another important one, which is called DIO, which is related to how to manage our inventory, and this is very important for our commercial people. We need to ensure that we have the optimum level of our inventory, right? Because the higher inventory, it means we have idle cash, right? Just money, in our house, has no return. And also, if we have a low level of inventory and sometimes we have out of stock issues, it means we are losing sales opportunities because we are not managing our inventory very well. So we need to manage our inventory, not to have excess inventory or have a low level of inventory or have an out of stock issues. How to manage it? We have an important KPIs which is called DIO. DIO means days inventory outstanding or days inventory in our hand, which means how many days we have inventory to cover how many days of our sales. So if I have 80 days DIO, it means my inventory is covering 80 days of sales forecast or of our sales. So again, definitely the higher of the days, it means also it's not efficient, but also we have to ensure that there is no out of stock or that stuff. And also our supply chain team has also another role in this one to ensure that we have the optimum level of inventory as well. So those in a nutshell, the very, very summary of the key finance terminology, but definitely we have a long list of them, but this is just a snapshot.
That's a lovely list. You touched base on commercial, supply chain for the inventory, the DSO, the DBO, the DIO, the difference between these, and the impact whenever it is higher or lower. But I have a few questions for you on the terminology. You mentioned P&L. What is P&L?
Yeah, P&L is very important statement, which measure our profitability. In general, if you have a small business, you have a big business, you need to know if your business is profitable or not, right? Am I generating profit or generating loss? So this is a P&L in a nutshell. In the key elements of the P&L are 4 elements. Our sales, how much sales I achieved, what is the cost of goods sold of the sales I have sold, and then I have to calculate the difference between my sales and cost of goods sold, which is our profit from my sales transactions. Then, as I mentioned, in any company, we have some operating expenses, right? So if I deducted my salaries and my travel expenses and all the other running costs from my gross profit, I will reach to my bottom line, which is our profit. So if you'd like to manage your P&L very well, very simple. Maximize your sales, minimize your cost, maximize your gross profit, having the right price, having the right sales mix, then optimize your expenses to ensure the right ROI, have a lean organization, efficient organization to have a right level of OPEX. At the end, you're gonna definitely achieve a good profit level or net income level.
This is very clear, but if I am a supply chain person,
yes,
And I see the pressure every time from the business. We have a demand signal, we need stocks. You're operating in a very slim stocks, and there is a push for more stocks, for example. Then what's the impact of having high stocks? Because here you said cost of goods sold, right? So I'll have all the stocks in the world, to deliver the best P&L ever required from the business. Why the finance and the commercial team and the management team keep pushing me on a very optimal slim stocks where the P&L has only the cost of goods sold?
That's a very good question, Mahmoud, and this is also very important for all non-finance people, that we have another two financial statements, because we are measuring our performance through three financial statements. One is to measure our profitability, which is our P&L or income statement. We have another two important statements. Okay, one is the cash flow statement. Okay, to measure our cash. For example, let's say you have $70 million profit. So we say yes, we celebrate that we achieve a very good profit. And when we have to pay to vendors, we don't have enough cash in the bank. When we have to pay salaries to our employees, sorry, we don't have enough cash in the bank. Why? Because we are focusing only on our profitability, but we are not focusing on cash. And cash is king, as everyone knows. So to manage our cash, there are another activities and another measures we have to take care about it. So I can achieve profit, yes. But what about my cash? Is my investment is in, as you said, inventory, just put in the warehouse without any return? Okay. Do I have a good collection or not? Maybe I have a very good revenue, but majority of my revenue is uncollected, right? Uncollected cash. So I have to manage my collection. I have to manage my inventory very well. I have to negotiate with supplier to extend the payment terms, right? My treasurer also have to manage my money very well. They have to manage our investment, ensuring that to have the cheapest resources to finance the company's activities, putting the investment also in the right areas to ensure maximizing the ROI. All of those activities to ensure that we have the right level of cash, right? So this is the second statement that we have to measure. The third statement, which is called balance sheet. Balance sheet is like a picture. Today, what you own and what you owe. That's all a balance sheet. What you own, I own assets, I have inventory, I have furniture, I have land, I have cash, I have receivable I have to collect. So this is my assets, right? This is one side of the balance sheet. The other side is how much money I owe to our suppliers, to our vendors, to our banks, to the tax authorities, all the liabilities. And then also as a company, I owe to the investors the money they put in the company, which is the equity side. So in a nutshell, balance sheet tell you today. I don't care about what happened in the history. Today, how much you owe, how much you own. That's all about balance sheet. Your financial position. Yeah.
Clear. Now, that's a clear question here, that are these three statements from non-finance people connected, or they are operating in isolation? If I have an own action in the P&L, will it impact my balance sheet? And how? And if I have an action on the balance sheet, will it impact my cash flow statement? So the synergy between these three statements, if you can just elaborate more for non-finance people, so at least they know the consequences whenever they take a decision on the P&L or on the balance sheet or on the cash flow, how this will affect the rest of the financial statements from a business point of view.
Yeah, that's another good question, Mahmoud. Yes, definitely the three financials are connected and they are linked. And let me give you some examples how they are linked. For example, if we maximize our profit, for sure, our cash flow statement starting with the net profit, right? When I have to build my cash flow, I start with the net profit. So the higher net profit, the higher definitely cash flow and the higher cash flow, for example, from operating activities and other stuff. Also, if I make for example, a higher sales, definitely the higher sales, definitely it will give for me, if I have a good collection also, it will make for me high cash, right? For sure. And if I did not make a good collection, but I have a higher sales, it will give me a higher accounts receivable, right? So accounts P&L also transaction is impacting my balance sheet, right? Also in the balance sheet itself, we have the equity section, right? And we have under equity section, return the earning. So the cumulative profit or the cumulative earning I have every year is reported under the balance sheet in the equity section. So all the all the three statements are connected together.
Okay, so this is clear, yeah, Muhammad. Now, from a skill gap point of view, you've mentioned the financial terminologies, you know, the basic ones. You said there is a lot of many other terminology, but for now we're covering only the one that you mentioned. If you work for other function other than finance, what are the key financial metrics or measures that the non-finance people, they need to be aware of? You mentioned how to read the numbers. You said in terms of period, year to date, year to go, months to date. In terms of terminology, AR, AP, days, DSO. But when it comes to target communication or exact framework of the financials that the company will be evaluated at the end of the year. So if you can share some light on the key financials, not terminology, but metrics, or measures, where the non-finance people, they need to be aware of. So at least they can manage their operation efficiently and effectively.
Let me give you some key metrics or KPIs for the whole corporate. Okay, then I'll tell you also for some function, for each function, they have their, you know, more relevant, you know, KPIs or metrics. Okay, for the whole corporate or the total corporate organization, definitely any company looking for sales growth for sure, gross profit, net income or net profit or operating income, OPEX percentage to sales, net income percentage to sales, gross profit percentage to sales. Those are the key, KPIs to manage our P&L. At the same time, also for balance sheet, we have some key KPIs, like as we mentioned, to measure the efficiency of our collections, the efficiency of our payment with our vendors. So we have the DSO, we have the DPO, DIO to manage our, short-term liquidity matrices, and also free cash flow also is very important metrics for any organization, because as we mentioned, that if you have a high profit, but if you don't have cash in, you cannot pay to your supplier, you cannot pay to salaries, whatever. This is very important. But for each function, they have their own or some specialized KPIs for each function. For example, supply chain, as you said, Mahmoud, they have to take care about definitely the DIO, right? The days inventory on hand. This is very important metrics for supply chain. For IT, for example, the return on assets, right? IT, they have to invest in CapEx or big IT or digital transformation projects. They have to ensure return on assets or return on investment, right? This for IT. For our commercial people, because they have to help finance in improving the profitability, so they have to, when they make any sales transactions, they have to ensure that they have the right sales mix, right? They have to ensure they have the right pricing. They should ensure sales growth, right? Profitability. When they make any commercial activities, they have to ensure that they investing their activities in the right place to ensure higher ROI. So each function, they have their own key KPIs or metrics, but what I mentioned also for the whole corporate as well.
Yeah. Related to the free cash flow, if non-finance person hearing us, he will say, what's the difference between cash flow and free cash flow? Is the cash flow in prison, this is free? And why we're calling it free cash flow?
Yeah, free cash flow also is one of the very important metrics, because in the free cash flow, we highlighted what are the available cash for, to pay to our lenders and to our investors. So it starts usually with our net profit, and then we put the changes in our net working capital, and then also we add the depreciation and the other non-cash items to ensure what are the available, and also we have to deduct from it any capital expenditure to ensure that what are the available cash to pay to our lenders or to our investors. So this is very important metrics to ensure that we have cash, to pay to our lenders and our investors for sure.
And I think the last question I have for you, Muhammad, if you would like to give an advice for a new joiner in finance function now, regardless of the industry they are operating in, just a new joiner now, how can you give that person an advice, giving your experience in finance, and how to be a more successful finance person, especially in a more disruptive world as we speak now?
Yes, definitely. I would like to give advices to any finance person, especially as you mentioned, newcomer or a new joiner, before getting overwhelmed with any operations, because some people from day one go to overwhelmed with operations, and no, this is not the right way. Number one, building relationships. This is number one. You cannot influence people behind computer screen. If I'm sitting behind computer screen sending thousands of email, please increase price, please cut expense, nothing will happen, right? Because you cannot influence people through sending email. So go to people, build the relationships, inviting people for coffee, inviting people for lunch, building relationships. This is number one. And people cannot listen to you, and you cannot influence people without having the right relationships. Even people cannot provide you the business insights if you don't have the right relationships, right? You cannot sell your ideas. As you said, we need to brand for ourselves. We have to sell our ideas. We have to sell our directions. We cannot do that without building relationships. Number two is, again, before getting overwhelmed with the operations, understand your business. Understanding business is our admission ticket to attend any decision-making table. If people doesn't get that you understand business, definitely they will not allow you to attend any strategic meetings, right? And even if you attend it, you will not add any value. So understanding business is very, very important for anyone, because understanding business, it will help you to understand what is behind numbers. It will help you to ask the right question, because if you don't understand business, how can you ask the right questions, right? Also, it will help you even, so some finance people starting building management report or whatever. Understand your business first, then build your management report, right? How can you put the right KPIs in the report?
True.
So you have to understand our business very, very well. Those are the two steps before getting overwhelmed with the accounting operations or whatever. Those two advice for any new joiner.
This is an amazing two advice, I have to admit. If someone came to me and give me this advice 15 years ago, I think the journey will be much easier.
Yes.
So good that you're sharing the light early enough for the people early in their career, so at least they can get the right message at the beginning of their career, rather than jumping into the systems, reports, graphs before asking these questions at the beginning. Mohammed, I think that was lovely episode. The way that you elaborated the finance terminologies, financials matrix, the 3 financial statement in like 2-3 minutes, explaining the finance sub-functions as well for non-finance people. That was lovely in this episode. And we would like definitely to have you later on to speak more about the finance business partnering. I know this is the most interesting subject to yourself. If I quote of what you said, finance business partner is not a title, it is a mindset. And I really appreciate your accepting this invitation, and wish you to see you again, Mohammed. Thank you very much for that.
Thank you very much, Mahmoud. Really, it was my great pleasure, and thank you very much for the great discussion and for the interesting question. Thank you very much.
Thank you, Mohammed.
Thank you.